Secret number one, raise all the money you need to do your first deal. When I first suggest the idea of buying apartment buildings as a means of achieving financial freedom, most people kind of give me a weird look. Maybe you're giving me a weird look right now. Okay, but judging by the expressions on their faces, I know they don't believe it's possible. And I can almost always predict what they'll say next. They'll be something like this. Michael, you need hundreds of thousands of dollars to do that, right? You don't actually. Or, but I don't have any experience in real estate investing. Thankfully, you don't need any. The truth is that you don't need thousands of dollars or years of experience in real estate investing to start investing in apartments. Did you notice that the entrepreneurs I introduced to you earlier got started without a track record, and most of them without any of their own capital? Yet 1 to 3 years later, they succeed in replacing their income and quitting their job. Now, you want to know how they did it? I explain it to you step by step in this video. Hey, I'm Michael Blanc. Welcome to the ultimate guide to financial freedom with real estate investing. I'm a full-time entrepreneur, investor, and coach, and I am passionate about helping others become financially free in 1 to 3 years by investing in real estate. Through my investment company, Nighthawk Equity, I control over $300 million of real estate, and I've helped my students acquire over 14,000 units at the time of this recording. So hit that subscribe button and notification bell now so you don't miss any part of this course. Let's do this. There are 4 secrets to apartment building investing success that will help you make your first deal and quit the rat race in the next 1 to 3 years. And you don't need previous experience or your own cash. This segment of the course is devoted to the first set of these 4 secrets. Now, when I speak to people about starting with apartment buildings, the biggest objection I hear is that they don't have the capital. They tell me they'll start their investing career when they have saved up money. But who knows when that's going to happen, right? And so they wait. Or they'll say they can't see themselves putting a building under contract if they don't already have the funds in the bank. Who's going to take them seriously? How can they raise all the money in time to close? And how can they get money from investors when they don't have a building under contract? So it's kind of a catch-22. And so they're stuck. Now remember that when I saw a huge opportunity to flip houses, I had deployed all of my capital into the restaurants and had nothing left to invest. So I thought, well, shoot, maybe I'll see if some of my friends and family want to loan me money to fund these house flips. And I remember when I got my first commitment for $25,000 from a friend, I had this huge aha moment when I realized that I could flip as many houses as I wanted to if I raised the money from others. At one point, I had deployed about $1 million. We flipped about 3 dozen houses over the next 3 to 4 years. And since then, I've raised millions of dollars for restaurants and, of course, apartment buildings. It turns out that I didn't need my own money after all. And neither do you. The truth is, you don't need tons of your own money. You don't even need good credit to get started with apartment building investing. The solution to getting started now without having any cash yourself, is to raise money from private individuals. Why you should raise money from others. Here are 5 reasons you should master the art of raising money. Number 1, well, obviously, you don't need your own money. I hate stating the obvious, but since a lack of money is the biggest objection to getting started with apartment building investing, it deserves to be stated plainly. So just to reemphasize this point, if you raise money from investors, you don't need to use or have any of your own. So do not let this be the thing that keeps you from tapping into the best real estate strategy achieving financial freedom. Number 2, you can get more deals done. I mean, even if you have your own money to invest, there are only so many deals you can get done using your own money. On the other hand, if you learn how to raise money from others, your ability to accumulate property is only limited by your ability to find good deals and your ability to raise money. And as you go on, you can raise more and more money. Therefore, the ability to raise money is an incredibly valuable skill to have. Number 3, in addition to doing more deals, you can do more bigger deals, okay? So with the back of your investors, you can go after bigger and more lucrative and more stable deals than if you're just using your own funds. Number 4, you have more eyes on the deal. Richard Feynman is a famous physicist, and he once said, the first principle is that you must not fool yourself, and you are the easiest person to fool, which is so true, right? So when you're using your own money, no one else is looking over your shoulder, and you're more likely to make mistakes. If you can convince others to invest in your deal, chances are you actually have a much better deal. Number 5, you're actually helping people. Because people with money have several problems. Number 1 is they're not getting a reasonable and consistent and predictable return because of the volatility of the stock market. Number 2, they're not getting any cash flow off their investment. Okay, they can't use it as an exit strategy unless they save so much money they can do that with. And very few Americans have the ability to save so much money to actually retire off the proceeds of that principal. Number 3, they're paying too many taxes on what they earn. And you can solve all these problems with connecting people with one of the safest and best investments on the planet, which is multifamily syndication. These investments yield an attractive return, they produce cash flow, and they give incredible tax benefits. So instead of being afraid to ask people for money, think of it more this way, that you're actually educating them, you're serving others. And even though you or they might be skeptical first, you'll find that they become grateful for the opportunity you're providing them. Now, you should be aware that there are a few downsides to raising money and having investors. Number one, well, you now need to report to some form of boss or advisory board, right? Chances are you'll have to report to your investors in one form or another. You may have to give them updates, financial reports, answer questions. So this is certainly more work than if you were just you in the deal. On the other hand, analyzing profit and loss statements and sending out reports makes you pay more attention to your own deal. You should analyze the reports even if there are no investors, but few of us have that kind of discipline. And as a result, we don't pay as much attention to the numbers as we should. Number two, you may feel that you lose some control. You may not be able to make all decisions without a vote from your investors. And as I'll discuss later, there are ways to mitigate this perceived risk in how you structure the deal. Number three, you might think, well, if I have investors, I won't get 100% of the profits. That is true, of course. But as the saying goes, 100% of nothing is still nothing. If you can own 100% of the building by using your own money, that's great. But if not, use investor money to get in the game. But all in all, under the bottom line, the advantages of using other people's money far outweigh the disadvantages. Now, this doesn't mean you shouldn't use as much creative financing as you can, seller financing, etc. But if you get skilled at raising money from others, you can get started with real estate investing today, and you can scale a lot faster. The money is out there. Now, when I speak to an audience of real estate investors, I show people how much money is actually out there. I ask people to raise their hand if they have at least $25,000 in cash, equities, or IRAs to invest in real estate. In a crowd of 100 people, half the people raise their hands, okay? And then I ask who has at least $50,000. And then a couple dozen keep their hands up. I then ask who has at least $100,000 to invest, and a handful keep their hands up. Very quickly, it becomes obvious to people that there's well over $1 million in a room looking for deals. Now, can you imagine yourself networking with these people and potentially partnering on deals that you find? Yeah, betcha. The total retirement assets held in the United States hit $24 trillion. But yet, according to Go Banking Rate survey, 69% of Americans have less than $1,000 in their saving accounts. And that's why when you speak to people and ask them if they have money to invest, they'll often say no. But when you ask them if they have an IRA account or 401k, they say, well, of course, I have like $400,000. Why do you ask? What people don't know is that they can legally invest with their IRAs, and they can invest with you, and they don't have to pay any early withdrawal penalties to do so. Instead, they take advantage of the IRS tax code that allows them to what's called self-direct their IRA investment. This means they can transfer their IRA accounts to a self-directed IRA custodian and then legally invest in money in almost anything they want. They can buy stocks and bonds, of course, ETFs, crypto, but also in LLCs, such as your apartment building. So it really is super useful to become familiar with self-directed IRAs and educate your potential investors. They'll be skeptical at first, but will soon discover that using their IRAs to invest is not only legal, but also one of the best ways to increase their returns and grow their retirement accounts. Now, by this point, you might agree that it might make sense to raise money and that the money is out there. But you have another problem, which goes something like this. I don't have a deal under contract, so I can't go out and talk to investors. Yes, that is a challenge. I've also heard this question or concern. I have a deal under contract, but now I don't have enough time to find investors so I can close. That's also a challenge, right? So this catch-22 keeps a lot of real estate investors on the sidelines with regards to getting in apartments and raising money. And this frustrates me because it have to be this way. I'm going to share a secret with you that will allow you to raise money from private individuals long before you have a deal under contract. So this means that you can get started today, right now. The secret is so hidden that I've never heard it revealed anywhere except here. I'm going to reveal it to you, and it's going to stun you with its simplicity. Okay, here it is. The secret to raising money revealed. But first, if you're enjoying this video, hit that subscribe button, please. The secret to getting financial commitments from your investors long before you have a first deal under contract is to make up a deal. That's right. Make it up by creating what I call a sample deal package. This document contains everything about your fictitious deal, including photos, information about the building and the area, actual financials, your business plan, projected financials, and returns. You're going to use this sample deal package to speak with potential investors. Use it to build credibility with other professionals, brokers, and loan officers that you're trying to recruit to the team. The difference between a sample deal package and a real one is that all the information about a deal is accurate, photos, location, etc., except that you don't have it on a contract. Now, the other difference is that your fictitious purchase price may be lower than the asking price so that you achieve the desired returns for the investors. Now, in other words, you approach your potential investors with a deal package that looks like the real thing. How to create your sample deal package. You can create a sample deal package yourself following a 3-step process. Step number 1, get the marketing package of a building for sale. Okay, get it from a broker that you have that's being marketed for sale. This property should be about the same size in the same area that you're looking for. It should have a good marketing package, meaning that it should have some photos, some good financials, rent roll, unit mix, enough information about the area and demographics, because you're going to use that in your sample deal package and you look like a genius. Now, there's a variety of websites that list apartment buildings for sale. And just do an online search, but for the purpose of creating a sample deal package, I suggest you use LoopNet, because it's free and easily searchable. So go to loopnet.com, create a free account, log in, and then search for properties that match your criteria. Sometimes you can just download the marketing package and financial package. Other times you need to maybe enter your email or fill out a form. And sometimes you need to contact a broker and complete a non-disclosure agreement to get access to the financials. So look for a property that has a marketing package with at least photos, financials, rent roll, and unit mix. If it's a bonus if it has extra goodies like demographic information, rental comps, sold comps, or information about the area. Step number 2, create financial projections. The marketing package you downloaded should contain the actual and projected financials for the property. A good financial model to create a 10-year financial projection and then estimate the returns for your investors. In your returns, incorporate cash flow, the reduction of loan principal, and any potential appreciation or profit at resale. Now, you can create your own financial model, or you can purchase my syndicated deal analyzer to get the job done. It's the most widely used analysis tool for syndications. I discuss more about analyzing deals in secret number 3, how to analyze deals and make offers in 10 minutes. So once you have a 10-year financial projection and you estimate your investor returns, you can copy and paste them into the sample deal package. Step number 3 is to create the actual sample deal package. Now, here's the outline of each of the sections that you want in that sample deal package. Number 1 is the executive summary. So this short section, half to a full page, contains a summary of the investor returns, if you're offering any preferred returns, projected returns, what the minimum investment is, the term of the investment, how many years you're holding it, a description of the property, and an overview of the business plan. For example, you're going to renovate, raise rents, you're going to sell in 5 years. Number 2, property information. So this section contains a description of the property, some words about the area, maybe the unit mix. I also add the business plan for this property. For example, if we're going to renovate the units and make other cosmetic improvements to raise rents, that would go in this section as well. The third section is called Opportunity Business Plan. This is kind of where you outline the problem with a property and how you're going to solve it. So don't worry if your financial projections aren't quite right or you don't have all the information. Okay, the accuracy is not as important. What's more important is that the story makes sense and is a compelling story. So describe the opportunity business plan with the property. Talk about, hey, the rents are under market because it's been poorly managed, vacancies are high, etc. And then describe your plan because you're a professional property manager. You're going to make some cosmetic upgrades. You're going to put that professional management company in place. And if you can do that, you can increase rents and realize the estimated returns. Then you're going to have a financials sections. Okay, this section contains the rent rolls and the actual or projected financials, whatever you get from the marketing package. So projected financials, this section contains the 5-year and 10-year financial projections, and then the estimated returns for your investors. Then there's a section about the management team. And here you have a short bio of yourself, but more importantly, remember you're selling your team. Especially if you don't have a track record, you're not going to talk about yourself too much. You're going to talk about your team members. So put on there your property manager, your lender, your attorney, your CPA, any advisors you have if you're working with an advisor or a mentor, any kind of partners. That goes in that section. This is really the credibility section, right? So it's going to give you credibility for putting a deal together and assembling a team. All right, so now that you have the sample deal package, let's talk about the benefits that you get. There's 3 major benefits. Number 1, a benefit for you is it allows you to better visualize your deal. Now this is critical, right? Because you're expanding your comfort zone, you're raising your confidence, and now you have this package. You've spent a lot of time on it. Maybe you even visited the property. You're writing about it, you're talking about it. And the more you do that, the more real it becomes. And the more real it becomes, the more comfortable you become and the more confident you become and your comfort zone expands. And confidence really affects how people respond to you, and confidence is critical. Number 2, a sample deal package empowers you to get started now, meaning that you can now schedule meetings with investors and say something like, hey, I don't have a deal right now, but when I do, it's going to look substantially like this. And then you show them a sample deal package, you address their questions and concerns, and it gives you something to talk about right now without having a live deal. The third benefit is it's going to allow you to get financial commitments from your investors long before you actually have a deal under contract. So by the time you get a building under contract, you already have primed your investors. You've received verbal commitments based on a deal that's substantially what you have in the sample deal package. When you have a property under contract, you're going to be able to send that deal package to your investors. They're going to recognize the format, confirm the commitment, and close on time. So creating a sample deal package allows you to get started now. Okay, now without having a deal under contract at all, it allows you to better visualize your deal, gives you the confidence to make offers, and secures commitments from your investors long before you put your first deal under contract so you can close on time. Now, if you're looking for more resource or help with this, okay, we have programs and resources that can help you go deep on this journey and gives you much more confidence. If that describes you right now, then book a call with us. We're at themichaelblank.com/call, and let's hook up and see how we can work together. The 6 steps to raising private money. Okay, now that you know the secret to raising private money, you know it's using the sample deal package. That is the number one secret for getting started right now before you have a deal. Follow these 6 steps to use that sample deal package to actually get financial commitments from your investors. And you want to do that before you put a deal on a contract. Step number 1 is create a mind map of your top 20 investors. The first step in the money raising process is to create a list of people you know. So take a piece of paper and create bubbles for each social group you're part of. Maybe family, you got friends, neighbors, coworkers, Boy Scouts, sports hobbies, church, synagogue, etc. Then inside each bubble, write the name of every person you know in that social group. Many people don't think they know anyone who can help, but after doing this mind map exercise, they're surprised how many people are actually in their sphere of influence. Now transfer that list of people into a spreadsheet, and that's only so you can track your activity with them. The goal here is to become more intentional with your relationship. That means whenever you speak to someone, you do so in a natural way, but when opportunity arises, you may steer the conversation to apartment building investing. The mind map helps you identify the first list of people to contact, and I want you to focus just on the top 20 and begin to reach out to them. Now, how do you get these people to say yes? That leads me to step number 2, which is to talk to everyone and get a series of yeses. Never discount anyone. Tell everyone you know what you want to do, what you're excited about. You're going to be surprised at what will happen. Always follow up with a lead from someone or referral from someone that you know. Even if that person doesn't invest, he or she may invest later, or be able to refer you to someone else. So make sure you don't discriminate, okay? Often it's impossible to tell who has money and who doesn't, who knows someone and who doesn't. It's amazing how much money seemingly low-key people have stashed away in their savings or IRA accounts. And similarly, it's also amazing how little money the flamboyant banker next door has to invest in anything besides his boat and second house. And many newbie syndicators make the mistake of trying to get a potential investor commitment too early. Like, I've seen too many eager syndicators approach a circle of influence like this. Hey Frank, I'm getting into apartment building investing. I'm looking for investors. The minimum investment is $25,000 and you get a 10 to 20% return on your money. Are you interested? Right? Now the problem with this approach, of course, is that it's too direct. And it's likely going to lead to a no that then becomes a dead end, and you don't want that. You only have a finite number of people in your circle of influence, and so you don't want a series of dead ends. What you want is you want them to introduce you to as many new people as possible. In other words, you want to expand your circle of influence, and you want a series of yeses. So instead of going for the close early on, try to get introduced to as many people as you can. Right? Ask them for things they can easily say yes to, whatever that is in your relationship. Could be a 5-minute phone call, it could be a coffee, whatever it is. So also a tip is focus less on the money raising part and more on building relationships. So here's what this conversation might sound like when you speak with a friend or acquaintance. You might go like this. Hey Frank, I'm getting in apartment buildings. I am so excited about this. I think it's going to really change the life of my family. I'd love to tell you more about it. You have like 5 minutes because I'd love to tell you about it, and maybe you get excited as well and maybe support me in this journey. I'd really like to hear back your feedback. Let me know. Now your friend will probably say, sure. Yeah, what do you got going on? I've never heard this before. And so now you have your first yes. And then once you get that first yes, you say, hey, it's pretty cool. I'm looking for apartment buildings right now in about 15 units. I'm working with a mentor actually. I'm going to buy this with investors who would otherwise invest in the stock market. The minimum investment is the way it's going to work is there's going to be $25,000 minimum, and they're getting a 10 to 15% return per year on the money. They get cash flow, amazing tax benefits. And what's cool is you can also invest with your IRA or 401k. Now, let me ask you something, Frank. Would you happen to know someone who might be interested? Maybe in a 5-minute phone call, because I really like to have some conversations. Even if you don't have the money, they might know someone who does. So a friend might say, well, sure, my boss. Or, hey, I might be interested, right? And so there's another yes. It's easy to say yes. Do they know someone? And so this is what you want. And be more intentional. You don't want to be aggressive and try to sell people on something. So instead of asking for any kind of financial commitment up front, you're asking maybe for a 5-minute phone call or for maybe a coffee. And because the people you're reaching out to in your sphere of influence, they know and trust you, they're more likely to introduce you to someone else they know who might be interested, even if that person doesn't have any money either. So remember, you want to expand your network and build relationships. Focus less on raising capital, really focus on sharing your enthusiasm. And that's really your first priority because raising money comes later. So always remember the following best practices. Talk to everyone and don't discriminate. Number 2, always ask for referrals and follow up with them. Number 3, mention a minimum investment, right? When you invite someone to the first meeting and you've told them by that's a minimum investment of $50,000 and they take the meeting, well, obviously in their mind, they already know this and they must have at least $50,000 to invest. Prevent the opportunity from taking a long meeting, an hour-long meeting when they only have $5,000 to invest and you're wasting everyone's time. But again, a lot of people may not have $50,000 to invest in their cash account, but they might have $50,000 in their 401k or an IRA. So make sure you distinguish with that. And again, don't discriminate with people necessarily either. Now, once you feel it's appropriate, ask the person to meet with you to talk specifically about potentially investing with you. Step number 3 is ace your first investor meeting. What do you want to accomplish with your first investor meeting? Ideally, you should get some level of financial commitment from your investor, a verbal one, right? But before you do, you're going to have to address their main concern. And so, which is really the perceived risk level. So make sure you identify the main risk factors in your proposed deal and how you plan to mitigate them. So if an investor hears that this is an unbelievably safe investment without any real risk, they'll grow suspicious, as they rightly should. You're going to be much more credible up front if you show them the risk of the investment and how you plan to address them. Speaking of risk, you already have 2 strikes against you as far as the investor is concerned. First, he may not know and trust you yet, okay? And second, you don't have a track record, right? And so you already have 2 strikes against you. So you're going to spend most of the meeting making the investor comfortable with you. Only then can you address other objections and maybe discuss the deal itself or investing in multifamily, including how much money they make. So just understand that the investor is more concerned about the risk of losing money than making money. So the goal is to build rapport with the investor and then demonstrate to him that you're going to be successful because you've educated yourself and you have built a team around you. And you can do this by talking about, your background. What's your background? And build some rapport with those people, share some personal information, then describe your professional experience, right? Because people want to see there's a pattern of success, even if it's nothing to do with real estate investing. Talk about your enthusiasm for buying apartment buildings. Why are you so interested? What have you done so far? Maybe you have a mentor, maybe you visited a property. And once you're done talking about yourself, try to keep it brief, okay? You want to really focus on your team. It's all about your team. Talk about your property manager that you recruited who manages 5,000 units in the city, okay? Talk about your SEC attorney, your closing attorney. Talk about your lenders, your CPA, okay? Talk about your team. You want to sell your team because those are the ones with track record. Now at this point, you've probably done most of the talking, but that's okay. You shared about your life and you're passionate about building long-term wealth for you and your investors with apartment buildings. You introduced them to your team. If you've done your job, your investors will say that he knows a lot better about you, has become more comfortable with you. It's now time to shift the conversation on how you might be able to do business together. And this is where your sample deal package comes in. So I actually have a deal for us to look at. Created what we call a sample deal package. It's a fictitious investment package, but it's based on a real deal. I don't have this under contract, but it gives us a chance to look at what a deal like this looks like. How would that sound like to you? All right, so next, review the executive summary page of your sample deal package with the investor, focusing specifically on the investor terms, not the deal itself. That comes a little later. Now, the kind of deals I'm looking at will produce an average annual return of about 13 to 15%, about a 6 to 7% cash-on-cash return. The minimum investment would be $50,000. How interesting would it be to you right now? That would be interesting to me. How long would the money be tied up for? I'm telling investors to keep their money in about 5 years. At one point, we will sell the asset, and that gives us enough time to renovate, raise the rents, and build a value to achieve those returns. How would that suit you? Yeah, typically we pay out distributions quarterly. How would that work for you? That sounds reasonable. What do you see as the greatest risks? Yeah, the risk would depend a little bit on the opportunity, but in general, I would say the biggest risk is that we can't execute on the business plan in the way that we want to. So maybe it might take longer. If we're projecting, say, renovating half the units in the first 12 months and it takes longer, that would be a risk, meaning we can't achieve some of the target returns that we're looking for. The way that we would mitigate that is by using just the best contractors we can and to make sure we have enough money in the account to never run out of money to finish the renovations. For example, every deal is going to be a little different, but in general, we're going to stay away from very heavy repositions and construction jobs and really look for more cosmetic things to kind of mitigate that risk as well. But once we get a live deal, we're going to drill down exactly what the business plan and some of the risks and opportunities are so we can understand those better. Before we talk about the deal package itself, are there any other questions or concerns you have about investing in general? At this point, the investor should be relatively comfortable with you as a person, as well as with you and the risks in the asset class and in terms of the investment. If you're just starting out talking with investors, don't make it sound like your terms are set in stone. Instead, gather information from investors about what they would and maybe would not like if they were to invest with you. Next, review the sample deal package itself. Don't spend too much time on it though, because you probably don't have much time left in the meeting anyway. Although the numbers aren't for a real deal, it should give the investor a feel for the kind of deal you're looking for. So let's take a few minutes and look at the deal package itself. Again, this is a deal I don't have under contract, but it'll look substantially like a live one we have. So let's go through and see what kind of questions you have. Then briefly go through each section of the deal package just enough to orient the investor and answer any questions. Don't focus on numbers since these will change anyway. Finally, you want to close by describing the logistics of closing on a deal from the investor's perspective. So I really appreciate your time today. Here's what's going to happen next. I'm going to keep you posted. When we get a live deal, I'll send you the real deal package. You can review that, ask me questions about the opportunity. If you decide to move forward, how much money you'd like to invest, we'll reserve that for you. We'll then give you the legal docs to review, the private placement memorandum, and a subscription agreement. And you're going to sign that, and then you're going to wire funds into escrow. And when we close, we'll provide monthly updates for about 3 to 6 months until things settle down, and then we'll move to more of a quarterly cadence as well. So that's kind of the general process moving forward. What questions do you have from that? So now give them the sample deal package to take home and schedule, this is important, a follow-up call or meeting to discuss any questions or concerns. Don't skip this step. Okay, you want a follow-up appointment, and then make sure you address their concerns now while you still have time, rather than waiting until you have a deal under contract and time is of the essence. Now, if you follow this process, you'll be amazed how quickly you can get commitments from your investors once you have a deal under contract. If you do this up front, it's going to give you the confidence to make offers on properties and secure the funds in time to close. Step number 4, stay in touch. Okay, after the first meeting, it's important that you stay in touch with the investor. Hopefully, you have the first follow-up call or meeting scheduled to discuss any questions or concerns they might have about the sample deal package. Ask them again if they feel comfortable in moving forward if you found the right deal. Now, after that second meeting, it's very important to stay in touch with that investor since you don't know how long it will take until you have an actual deal. So you want to call or send an email at least once a month, give them updates, send them a valuable article about the market or anything like that, and just to see what's new in their life. One thing you might consider is putting all of your potential investors on an email list and use an email service like MailChimp or ActiveCampaign or something like that, and then send something out like a newsletter every month. That way, they're used to hearing from you, and you've created a systematic way of staying in touch with everybody. Step number 5, sign a letter of intent to invest. Once an investor verbally commits to a certain dollar amount, I use something I call a letter of intent to invest. It's a short one-page document that is not legally binding, but it kind of formalizes the commitment in writing. A nice additional benefit is that it can act almost like a proof of funds letter when you're making offers. Step number 6, expand your network. Once you've contacted everyone in your immediate circle of influence and you continue to cultivate those relationships, it's time to cast a wider net. So here are 3 tips to expand your network of potential investors. Tip number 1 is warm up your cold contacts. And take a look at your contact list in Gmail or Outlook or whatever address book you use. Chances are you have hundreds of contacts. Maybe you've lost touch with them. So before you delete them, perhaps there's a way you can reconnect with your cold contacts. The way you do it is you import your cold contacts into a mail service like MailChimp or ActiveCampaign. I like ActiveCampaign. MailChimp's fine too. And then you send out a first email and you kind of apologize how bad you've been about staying in touch. Give them a general update about your life and ask what's new with them. You'll be surprised how many people are delighted to hear from you, and boom, all of a sudden those cold contacts are now warm contacts. Now again, you're not going to raise money with them on the first email, but you want to continue interacting with those new contacts in a natural way, right? And so this may take several weeks or even months, and you got to be patient, but you also have to be intentional. So for other contacts who didn't respond, continue sending out a monthly update, and in future communications, you can be more intentional about your apartment building activities so that people begin to know you in that way. So continue this process until a person either unsubscribes or reconnects with you. A super cheap and easy way to expand your network. Tip number 2, network at local real estate events. One of the best ways to meet potential investors is at your local RIA meeting or meetups or anything like that. In fact, you should attend every real estate investing meeting in a reasonable driving distance you can go. You can check it out on meetup.com and look for local real estate meetups. There's even several virtual ones as well. Definitely take advantage of those, or any kind of conferences that are upcoming as well. And so this is a great way for you to expand your network, look for potential partners, look for potential advisors or mentors, or even investors as well. Tip number 3 is network online. So there's online communities like Bigger Pockets, for example, or ours is the Dealmaker Mastermind. And find these online communities and really engage with them, see what's what, see what people are posting, and try to engage by maybe answering some of those questions. And so this is a fantastic way to meet people, and then you schedule Zoom calls from interacting with people, and this is how you network online. The secret to raising money is a game changer. So what difference does all this make to your ability to get started with apartment building investing? We've covered a lot. Let's talk about that. And really, this secret to raising capital makes all the difference. And if you use the secret to raising money, you follow the steps that are outlined in this chapter, you can get verbal commitments from investors before you have your first deal under contract. Okay, this is super important, because wouldn't that allow you to make offers with more confidence? Right? If you knew you had $250,000 behind you from investors, couldn't you now see yourself bidding on $1 million project, right? The answer is, of course, yes. It would give you a lot of confidence. And so therefore, this secret of using the sample deal package to start raising capital now makes a material difference in how you approach people and how you speak with brokers and sellers and the confidence you get from that. Because once you have a deal under contract, it would only take you a few days to actually raise the money, because all you need to do there is reach out to those investors, remind them, reconfirm their commitment, and then simply get a yes from them and they proceed down the process, versus waiting till you have a live deal under contract and then now starting the process of raising capital. Very difficult to do. I don't really recommend it at all. So now you know how to raise all the money you need to do your first deal. And that leads us to the next secret: how to get your offers accepted even if you're a newbie and don't have proof of funds. So hit that subscribe button and the notification bell so you don't miss any videos about achieving financial freedom. And let me know your thoughts and questions in the comments below. And I'll see you in the next video where we're talking about how do you get your offers accepted and be taken seriously by brokers even if you're a newbie and don't have proof of funds.